You mentioned about Middle India as being a category that Capria Ventures has been looking into.
Our vision when we formed the fund in 2013 was to say, let's look at tech entrepreneurs who are building products and services to meet the needs of Middle India.
Capria Ventures, a global South specialist venture capital firm, has marked the first close of its target of $100 million fund.
And what would you say your average ticket size is?
It's anywhere from 500,000 to $1 million US.
There was talks on how Capria Ventures was raising $100 million for India Fund 3.
Big part of the way to our first close. That's, for venture fund, always the big event.
Toward Kochi, Hyderabad, Bangalore. So any observations that you have?
A lot of people are very skeptical about India. That they were just not believers that the economic opportunities was here. There were no unicorns back then, right? Now people really see the India growth story.
What do you think reason is for that to happen? So you've invested in a lot of countries in the global south, is what you say. So which country do you see is the most exciting?
India of global south is by far the largest market, obviously, but also the highest growth on a large base.
What do you look for in founders that you're investing in? Is it looking at the competition, your fellow competitors? There's Axel, Sequoia.
I think that all of them.
Are there any startups that you look back and say, oh gosh, I wish I had invested in that company? Welcome to another episode of Tech Talks. I'm Vandana Nair from AIM Media House, and today I have with me Will Poole, co-founder and managing partner at Capria Ventures. Hello, Will. Welcome to our Tech Talks show. How are you feeling?
Great. Good to be here.
And how has India been treating you so far?
This time of year, always good. Much better than during the monsoon.
All right. So, Will, the last time we spoke, you mentioned about Middle India as being a category that Capria Ventures has been, looking into. Has this been your vision from the beginning?
It has. Going back to our work, started really in 2012 when we formed our investment firm. Our first fund was 2013. My partner, co-founding partner, Dave Richards, and another partner had been working in microfinance even earlier, also focused on lower income, broad-based India.
Okay.
And so our vision when we formed the fund in 2013 was to say, let's look at tech entrepreneurs who are building products and services to meet the needs of Middle India.
Mm-hmm.
And this was before data was cheap. This was before phones were cheap. This was before their inexpensive laptops even. But we saw those trends happening.
Mm-hmm.
And we saw that was going to benefit a very large number of aspiring people who had increasing disposable income and who could benefit from technology and things that really matter to their and their families' lives. So that's why we got going on it.
Okay, so can you describe your portfolio? How has it been over the last decade? What kind of companies you've been looking at?
So we started very much as generalists, right, with really a couple of themes. One obvious one was tech forward and scalability. Another one was asset light.
Okay.
Right? So we didn't want to do things that required a very large amount of capital to be successful.
Mm-hmm.
And the sectors in which we found good founders operating included ed tech. One that we subsequently called job tech. I think we might have been the first to coin that term of being technology that services a large number of employees, helping them either get first jobs or better jobs or get more training or compliance or whatever it might be. So ed tech, job tech, health tech, obviously lots of opportunities for technology to help. We later have gotten into more ag tech. So that's been in the last couple of years, but we didn't start there. And then there's just a general area we call B2B SaaS. That's, again, in areas that are serving those spaces. Now, across all of those sectors, we also look at fintech. And fintech can be applied in almost every one of those sectors to make a business more effective or to offer additional services to customers.
Okay.
So if you look across our global portfolio, it's about 40% has some aspect of fintech.
Mm-hmm. Okay. And how do you source these startups, the ones that are providing these kind of solutions?
We're not different than other venture capitalists. We've got a team on the ground here that sit downstairs from us, and they go out there every day and meet with founders and go to events So that's the obvious way, right? Another way is simply by building a brand as a venture capitalist focused on the sectors I described. Then founders who are in those areas are going to, find us, right? So we get a lot of inbound. We get referrals from our existing founders. They're meeting people, right? Founders talk to founders.
Yeah.
And we've been aggressive in marketing over time, really trying to tell our story because our story has been a little different, right? So we really want founders to be able to find us and see that we do something different. And that's why we like to talk about what kind of opportunities are there and talk about the companies that we find as well.
Got it. And what would you say your average ticket size is for the investments of Capria?
Nowadays, it's anywhere from 500,000 to $1 million US. And back then, it was actually starting at a crore. So, it's gone up to 3 to 8 crores now.
Okay. And a few months ago, there was talks on how Capria Ventures was raising $100 million for India Fund 3. So what is the progress on that?
Actually, that's one reason why I'm here. I'm always here to meet investors. And I just talked earlier before we started about the various cities that I've been touring around here, from Kochi to Mumbai to Hyderabad and Bangalore, of course. No, very, very well. And we're a big part of the way to our first close. That's, for venture fund, always the big event to get things going. And we've got SEBI approval for the fundamentals. And we now just need to circle the investors and send documents out to them actually starting next week.
Okay.
And we have both U.S. investors and Indian investors who will be coming into the fund.
All right, great. And like you said, you've toured Kochi, Hyderabad, Bangalore. So any observations that you have in these cities from different states?
Well, actually, I really don't really have any regional variations because we talk to the same types of investors, which tend to be high net worth individuals and family offices, often led by a founder who has either some affiliation with tech or maybe their kids have some affiliation with tech and they believe in the opportunity of tech to really scale and make money and make a difference in India. So that happens really everywhere we go. What is different, though, is that when we were fundraising back in the 2012, 2013, a lot of people were very skeptical about India. That they were just not believers that the economic opportunities was here. There were no unicorns back then, right? Now people really see the India growth story. And that's seen on a global basis. So that part makes our life a little bit easier.
And what do you think the reason is for that to happen? Like where now we have more confidence and belief?
Well, sustained GDP growth helps, right? Sustained consistency in the government helps. The fabric of digital public infrastructure here is best in the world. And so those are all things that are really important for founders. You've got economic stability and growth. You've got public investments in things that will grease the skid, that will reduce friction, allow founders to move better and faster. And so I do think that always creates opportunity. And of course, we have the cheapest data in the world here. We have reach of that data into where the mass populations are. So there's a whole lot of things that have lined up in the ecosystem of India that make it very founder attractive and therefore very investor attractive.
Got it. And would you say even the digital adoption in, say, tier 2, tier 3 cities in India has kind of led to a lot of confidence or, the reason why you would invest in startups working on that?
Well, we were investing like before there was a lot of digital adoption, right? So we've been looking around the corner, seeing it coming for a long time, right? 12 years now. So it certainly has more than surpassed our expectation from that perspective. Right, the speed at which Geo rolled out and the cost of data came down, the cost of phones coming down, those have really been phenomenal for everybody. And from the kind of business we invest in, they make possible things that simply weren't possible even 5 years ago.
And so you've invested in a lot of countries in the global south, is what you say. So which country do you see is the most exciting? And which do you feel would require more support or help?
Yeah, well, I'd like to say we love all of our children. Look, there's no question that India of Global South is by far the largest market, obviously, but also the highest growth on a large base. You can have a high growth on a small base, that's not so hard, but a large base, high sustained growth in India really stands out. And all the other aspects that I described earlier. all very positive. And that's one reason why there has been a flood of venture capital coming in here, and maybe even too much. A whole separate conversation. But India is certainly the strongest market of the markets in which we invest in.
Got it. And you've been investing for a very long time. So you've seen the market. So do you see a big difference in US startups versus Indian startups?
It's funny, people ask me about U.S. startups pretty often, and I often say, I don't really know much about U.S. startups anymore because I've been so focused on my Global South work for, more than a dozen years. And so I have a couple of U.S. investments, but out of my family office, but I frankly spend all of my time thinking about Global South. I know we can characterize, when we get into AI, the investments really are very different, and we can talk at some length about that. Mm-hmm. But broadly speaking, the U.S. startup system is just seen as just different than here for sure.
All right. And what do you look for in founders that you're investing in? Is it their education, the pedigree they bring in, or are they building any proprietary models, something unique?
I'd say if there's one thing we've learned in 12 years is that you cannot make any compromises in founder selection.
Right.
And you have to find a founder that has a set of qualities we can talk about, that you have good chemistry with. And probably one of the most important qualities that comes first for us is grit and determination. Mm-hmm. I met with a couple of founders just a few hours ago who've been at building their business for, I think we invested over 4 years ago. Mm-hmm. And the business is still not that big, but these guys are determined. And they keep making the product better. They keep building their presence, inorganics coming in, and they're still growing the business. And it's by U.S. standards, many founders would have walked away. But by Indian standards, these guys are, one, they're committed. Two, they see the opportunity. And three is they just have that determination for success. And that's something that we see in a lot of our founders. And we also have others that have just walked away from businesses that weren't scaling as fast as they wanted. So that's something I certainly want we want to say is grit and determination. Mm-hmm. In terms of proprietary things, I don't look at patents ever. Mm-hmm. Okay, it dealt in the world of patents back when I was at Microsoft. Here, it just doesn't matter. So anybody comes to you and says, "Oh, I've got patented technology," well, then you're confused because that does not matter to your ability to succeed in anything other than maybe material sciences or hardcore biologics, which we don't invest in. Yeah. So patents don't matter to us. The thing that matters to us is the term that gets discussed a lot, which is the moat, right? Which is really what is the sustainable differentiation that a startup has versus their current or future competitors. Mm-hmm. And is that moat both wide and deep? And does that moat make itself bigger? Is it self-sustaining, or does it drain over time? Mm-hmm. And we've seen both, right? We've seen ones that get bigger and better as they get used. That's an increasing returns or network effects kind of business. The moat gets bigger and better. We've seen other places where the moat is really not as good as you think it is, and the competition can move it quickly. So great determination, fantastic moat. Those will be a couple of things that we look at probably first and foremost in the sectors that we operate in.
Got it. But in the moat, if you have startups who are built on wrappers or those kind of solutions, but they are kind of positioning themselves saying that this is our moat, is that still okay in the long run?
The question is there data being generated as a result of, or maybe even knowledge, but probably data as a result of the operation of whatever they have? And some people think of wrappers as a derogatory term, which, and other people say, well, SaaS is just a wrapper on a database, right? And that's the entire industry of SaaS. Yeah. So I don't think we look at the word wrapper as derogatory. I think what we do look at is there true deep innovation that's been applied here? And is it generating business data that can turn into moat that will then help them really sustain over time? That's what we look at it more.
Got it. And in specific domains such as healthcare, education, edtech, do you see any particular thing which is better to invest in?
I think that all of them are going to have both winners and losers, right? Venture capital is littered with all that, right? I think here, let me talk about healthcare for a minute, because that's an area that we we slowed down in for quite a while after having burnt our fingers on some device businesses that didn't go very far. And we're now getting much more focused on healthcare because I think AI is going to play such a vital role in healthcare. And we have one business that has a self-reinforcing moat, meaning that the moat gets bigger and deeper by itself as a result of this operating. And it's a company called 5C Network, and they are a teleradiology business with AI diagnostics. So they collect images from, say, some 500 hospitals, 200,000 new images come in every month. Radiologists read the image, produce their findings, and that then creates training data that can go back into an AI to have an AI do a detection for the disease. And then that makes that more valuable to the radiologist because the AI can do more of the work. So then the radiologist uses it more. So that means you've got effectively a network model where the moat is in fact getting bigger and better as the software is used. That's the kind of business that we like in healthcare. I've seen other businesses in healthcare that just don't have much moat. They put something on top of an LLM that might engage with a consumer. It could do interesting work, but it's not clear that the LLM just getting smarter and better won't take over what they're doing because they don't have any fundamental moat.
Got it. I remember we had discussed 5C Network, and that time you said an interesting thing where it's better for local startups, as in they have better information and better data of the local market. So it is better for companies to partner with them rather than big tech. Right? Is that, and why do you think that is the case?
In their case, interestingly enough, they started, for example, using some US developed AI models and applying them to the images they were acquiring in India. And they didn't perform very well. And the reason because the images that were taken for the training of the US models were from just pristine, high quality images. They were maybe taken by the best techs ever. And here you've got lots and lots of techs operating out, meaning imaging techs, right? People that are running these CT scans, MRI, X-rays in tier 2, tier 3 hospitals. Maybe there's just not that much expertise of how good of an image they grab, right? So they had to train their AIs on the images of India, which are different. Not the human physiology is the same, but the quality of the images that are taken are different than the quality of images that are taken in the West. They then built their AI and in the local context and have had amazing success with that. So I do think that for any AI company or AI powered company, having access to local data to either tune or fundamentally train or enable the system is critical for success.
Got it. Looking at the competition, your fellow competitors, there's Axel, Sequoia. How does Capria Ventures stand out in?
Well, I wish I could say that those are my direct competitors. They are far larger than we are. They're both very successful and established brands. We really are a boutique brand on that front, right? And so our expertise is within India, our focus on middle India, rising middle class, our focus on job tech, on the future of work, our focus on AI-enabled asset-light businesses. And we're experts at those. And we also are experts at bringing knowledge from other emerging markets to bear here. Some markets are actually advanced further than India. Some are behind. And one of our observations as a global South investor is that similar companies are created in different markets at different times. So we, sitting and looking across these markets, can bring knowledge and help founders either just simply from our knowledge and helping them as a guidance, providing guidance and advice, but also by connecting them to other founders in other markets who can help them build opportunities. So those are things that differentiate us as a boutique investor in our space.
Got it. So then would your exit strategy also be different when you compare to your fellow competitors?
Not dramatically, right? So we will exit by secondaries, we will exit by trade sales, we'll exit by IPOs, and in approximately that order, right? So we don't really expect IPOs from any of our companies because we come in early enough so we can sell either in a secondary trade sale and get a very good return. But in the event that we have a company that's done very well and grown quickly, we're truly excited to help them go to an IPO, and we have a couple of them that are on that path now.
Got it. And when would you look towards an exit strategy? What scenarios?
Whenever there's a buyer. and whenever the founder wants to exit, but it's important, right? We actually had a situation with a company that was growing nicely, and they had a buyer came to the table, and the founders thought about it very hard and said, we think, yes, we'd like to do this. One of the investors didn't want to sell. We wanted to sell. We want to support because the founders want to sell. And so we really try to look at what the founder's signal is and support the founders. They're willing to stick in there and, have the grit and determination to grow for another couple of years. We're with them. If they say, hey, I got an opportunity, I want to go for this, we'll support them.
Got it. And are there any startups that you look back and say, oh gosh, I wish I had invested in that company?
We always have anti-portfolio lists. every VC does. Well, the one that my partner Soya points me to frequently is Captain Fresh, which we looked at, and our friends at 314 invested in them, and we looked at them, and Surya's like, hey, this is a great business. And I said, yeah, but we just don't know anything about fish. I might love to eat it. I don't know anything about selling it. And he's like, well, but we could do well. And we ultimately couldn't get enough internal conviction on it, and we should.
Okay.
So, yeah, we always have our list like that.
So that's always there.
Of course.
Okay. Going on to your personal journey, you've had quite an interesting story. You built a startup, which was then acquired by Microsoft, and then you went on to lead a lot of key projects there. So can you tell me your experience during that time, late 90s, how it was?
Well, it was certainly, we were talking earlier about sort of the comparison of now with the rapid advance of AI, when else has the industry been as exciting? And the answer really goes back to the dawn of consumer internet, right? And that was the mid to late 90s. Yeah. And the internet was around starting in the late 60s, I believe, with ARPANET. And then I used the internet when I was at Sun Microsystems before. So internet was there, but it wasn't a consumer phenomenon until that really the beginning of the 90s starts picking up, mid 90s getting hot, obviously leading up to the dot-com. And so we sold the company to Microsoft in 96. We were a pioneer in e-commerce. Yeah. And I went on to get involved with the Windows business. And it was a pretty exciting time for that because PC usage in the enterprise was growing like crazy. Y2K was around the corner. One of the biggest things was the realization that hacking had a business model behind it. So people weren't just hacking and doing things for fun or glory. They were actually doing it to make money. That was a real problem for us. We spent, huge amounts of time and effort trying to, and to this day, every tech company is doing that, but that happened in that same time frame. So massive explosions in use of both consumer and enterprise. Tectonic shifts in costs and availability of devices and new business models evolving, both good and bad. All those things were happening in the late 90s, early 2000s when I was at Microsoft.
All right. And the ease of doing business back then and now, what would you say has changed?
Well, the big advent for that is cloud, right? It's cloud and low-cost data. And so before cloud, if you were like when we were a startup in e-commerce, we had to buy a rack of servers from Sun Microsystems that cost a lot of money, right, to run our e-commerce system. Nowadays, of course, you just put that up on Pick Your Cloud and you just pay as you use it. So that's really changed the cost of entry. The advent of open source and very highly capable open source models of development that can make it possible to create a company with a handful of engineers with literally no capital expense in a handful of months to create something that's really quite powerful. So the overall cost of entry into the software business, which is what the world that we play in, has come down by orders of magnitude in the time that I've been investing and operating in this world.
Got it. And I think the same would apply even for the way AI is advancing, right? Like with the compute cost and everything going down.
Indeed. And that's where you really look at what happened with DeepSeek a couple of weeks ago. And that really sort of pulled the rug out from under those that were spending hundreds of millions of dollars, maybe more, on data preparation and human-assisted, human-in-the-loop, human-supervised training of these models. Yeah. And as recently as I believe today, Sam Altman's come out and said, well, this thing that we've been training for all these years and spending those hundreds of millions of dollars on, this is going to be called GPT 4.5, right? It's not going to be big enough And I'm sure that DeepSeek changed the equation for OpenAI as they saw how much was done with the reinforcement learning model, much, whether it's, again, one order of magnitude or two orders of magnitude cheaper, I don't know, but dramatically cheaper. And that means that the entire world has changed relative to the cost of producing AIs. And then you get the cost of using AIs also. That's come down dramatically, maybe 10x, 5x. That means they can be proliferating and used in many, many more scenarios.
Got it. And with the current AI race that's happening, do you think India is a forerunner in this race?
I think India will be a forerunner in the applied AI space. I do not think India will be a forerunner in the foundation model space. I don't think it needs to be. I think there's 7 foundation models out there now. 4 of the 7 are open source, which means that people can take those and modify and improve them. So I think there will be people that will spend time on foundation models here for good reason. But I think what's more interesting is going to be how do you take the capabilities of those foundation models and apply them to specific needs. So think about the Indian healthcare system. Think about Indian enterprises who have specific challenges around data and costs. Put a foundation model inside their firewall, train it on their data to do interesting work. That's going to create really phenomenal value. And so we're really excited to find founders that are thinking about bringing the technology developed from around the world at this point at the foundation level and applying it to the problems of Indian business.
Got it. So then the discussions on we need to build one, let's fund startups that are building it. So has it become just like a question of pride?
That's the way I would read it. And it's not clear to me that it's going to make a difference to the outcome of how India succeeds in this space, which it will do. Versus, for example, the digital public infrastructure. That's fundamentally a game changer that nobody else has done in the entire world to that level, right? And Nanda Khani just deserves enormous credit for what had happened there. And it's to this day is not replicated. So if you think about the implication of that versus should India have the 8th foundation model, I'd rather see more DPI than an 8th foundation model, right?
Absolutely. All right. Thank you so much, Will. This has been very insightful. Thank you so much for your time.
My pleasure.